Hey everyone. Today's short lesson is about the difference between bookkeeping, cash flow, and taxes. When I'm working with new business owners in the trades, I often hear people getting mixed up on what's what and how they fit together. So we're going to briefly go through each to explain what they are, then I'll show you how they fit together to keep your business running smoothly. Before we begin, my name is Alex King. I run JM Capital Bookkeeping Solutions. We offer bookkeeping help to small businesses in the trades, whether that's handyman, plumbers, electrical, HVAC, painting, and so on. I also own and operate Mountain Handyman Company, so I know firsthand what it takes to run a business in the trades. So, to get back to the subject, what is bookkeeping? See, bookkeeping is about accurately recording what's already happened. As you run your business and go through your work days, you're going to be spending money and you're going to be making money. Bookkeeping is the act of properly recording all those transactions. The goal or the final product of bookkeeping are the financial reports. So, in a small trades business, that's going to be mainly your profit and loss and to some degree your balance sheet. Having these reports accurately is going to allow you to look back in time and see how much you made, how much you spent, and how much you kept over any given period of time. Cash flow, on the other hand, is about what's going on now and into the future. And this is very important because you need to make sure you have enough money in your bank account to cover your expenses. As a business, you will always have to spend money before you make it, even if it's just paying for maybe some print flyers to generate some business and the cost of gas to get to your first job. But the bigger and busier you get, the more complicated this will become. So, job costing is another thing that comes up, and this is actively tracking your profitability of a specific job in real time. So, let's say you're remodeling a kitchen and you bid $15,000 to do it. If you're job costing, you're tracking everything you spend related to that job, both materials and labor, to ensure that you stay on budget and don't start eating into your profit margin. Taxes are going to be the third component. So, cash flow management is strictly for business management. You're not going to tell the IRS anything you've done to manage your cash flow. You're strictly doing that to make sure that your business is running profitably. Bookkeeping, on the other hand, is a mix of the two. You'll want to look at your financial reports because that's going to give you critical information about how you're making and spending money. And those financial reports are also going to be one of the key pieces of information you give to the IRS to report your taxes. Taxes, when you run your own business, work differently than when you work for someone else. When you work for someone else, they figure out how much you owe the IRS and they withhold that on your behalf before giving you your paycheck. When you run your own business, you're going to go about your entire year spending and making money, and at the end of the year, you see how much profit you made, and that profit is what you're going to pay taxes on. So to quickly review, remember bookkeeping is about what happened in the past. Cash flow is about what's happening now and will happen into the future. And taxes are reported at the end of the year based on how much net profit you made for the year. So thanks for watching. I hope it was helpful. I know it was a short presentation and it didn't go into much detail. So if you are new to business or you have any specific questions about your bookkeeping and accounting, I offer free Q&As every Wednesday morning from 7:30 to 8:30 Mountain Time, 7:30 to 8:30 a.m. If you want to attend, you can sign up using the Calendly link in the description or feel free to reach out to me directly at the contact information on the screen.